Ladies and gentlemen, welcome to episode number 8 of the Futurum Equities podcast. Got myself, Shay, Boloor, aka Stock Savvy Shay. You got the legend Daniel Newman right now after a busy work week on talking on TV on earnings. We got a lot to uncover, so I think we should get right to it right now. Do you want to talk macro first or specific earnings first?
Yeah, let's do the backdrop first because I think it sets up everything. I do want to just tell a really quick story because I think it's super fun. Did you know that when I landed at Newark at 9:13 on Wednesday night? Okay, Newark, New Jersey, and I was on the plane, not even off the plane. I was able to deplane. I did a full sprint from the plane to the car service. I got to Manhattan. There was a play because I stay right by like the Broadway area, right? There was a play, so I couldn't even get to my hotel. 3 blocks away was the closest the guy could drop me. I sprinted through 3 blocks with my bag, Shy, got up the hotel to the desk, got my key, got to the room, adjusted furniture, dried myself off from sweat because it was also raining and sweating out, put a suit coat on, and then did a 13-minute CNBC hit on the news of the Trump tariffs and semiconductors, which, by the way, we crushed it. But it was just an amazing story of what I do for the community to make sure that these insights are on the record. Because I don't really like doing TV that much, but I love the opportunity to share wisdom, and that's what we're all about here on the Future.
Yeah,
know the commitments that our team is willing to make to bring alpha to our investment community, to the people that Futurum Equities serves.
Yeah, I mean, I hear you. I think I slept 5 hours a night this week during earnings week. There's just too much happening, and for you, especially when you work that late and do the TV, I know you're pumping those gains at 5 a.m. the next day too. So like,
well, you're up at 2 though, because I'm on the East Coast in the gym at like 5 or 6 a.m. and you're already tweeting, and I'm like, people know this. Shay is not a robot. He does not like when you're seeing him tweet. That is him writing those poetic little sonnets about every company. It's a beautiful thing. It's a beautiful thing.
Well, appreciate the kind words. Yeah, I mean, I have OCD and a trust issue, so it's always going to be me. But let's talk macro though. I know a lot happened this week. Let's talk. Do you want to talk tariffs first? Because I think you have a lot of insights on what's happening behind the scenes there.
I mean, look, it was a really big moment for everybody that's not paying any attention, which I hope it's not you out there, because if you're investing, this macro stuff's really important. And yeah, there's a lot of tickers to talk about right now, but we were waiting, right? What is Trump going to do with semiconductors? So we, all the reciprocal tariffs and all the deal deadlines. Well, he came out and basically said, there's a carrot and a stick. I've told you about the stick. Here's the carrot. And by the way, Shay, there's like tons of interviews of me on the record, CNBC and Bloomberg, everywhere going, he needs to tell companies what the benefit is to onshoring. And he never really did. He's like, everybody needs to onshore. And you got commitments like from Jensen and from CC at TSMC. And now we got one from Tim Cook at Apple. But it was like, what's the benefit? Well, the benefit is you're either going to pay 100% tariffs or you're going to make a commitment here. And by the way, you don't have to actually do anything immediately, but as long as you have a plan, you commit and you execute on it, you will pay 0. So this ended up being a massive tailwind for big tech. Apple off the hook on tariffs. TSMC off the hook on tariffs. NVIDIA off the hook. Now the smaller companies, the AMDs, I hate to call it $1.5 trillion Broadcom company, but Broadcom, Qualcomm, they're all going to have to come to the table now. Micron made a $200 billion deal to do more manufacturing in the U.S. People are like, Micron only has $8.5 billion of cash on the balance sheet. That's okay. It's not 8.5. It's not 200 billion today. It's what are you going to do in terms of building projects, bringing back manufacturing, and doing more here. Having said that, though, I do want to say one more thing about this tariff and macro thing. What the heck is going on with Intel? President Trump comes out and basically says CEO is conflicted. I don't know if that's true or not, but Intel's already like back against the wall, right? And what a terrible situation to be in. You were the U.S. company with a U.S. foundry plan that could have been the U.S. chip champion, and now you don't even have a seat at the table. Like, this was the best and ripest opportunity. And I used a lot of my sort of social capital to tell people that I thought this administration would be very good for Intel. I've been wrong. Seems that I'm continuing to be wrong. I still think it should be, Shay. It should have been the moment that Intel got it. And President Trump should have been going, NVIDIA, 20% of your chips need to be done by Intel. AMD, 20% of your chips need to be done by Intel, because we don't have the IP here. we don't have a U.S. chip champion, and now we're still back to depending on TSMC, which is getting a waiver on the tariffs, which is even worse news, or a pass on the tariffs, which is even worse news now for Intel.
Well, I think for Intel, it's just a quality issue, like the benchmarking issue, and maybe it's just not up to par for Trump to even brute force people using them, because I think everyone knows that Intel is their own biggest customer, and it sounds like it's going to be like that going forward. But regarding the macro front, though, I think it's really funny to see how a scary movie isn't scary the second time you watch it correlates with what's happening in the macro environment right now, where Trump's tariff blitz is just, again, another opening act of the art of the deal rerun. And you can feel it in the way that tech has been rallying since he labeled 100% tariffs on semiconductors. Everyone knows that's absolute BS. And I think that they know he's threading a needle. He wants more U.S. investments. And you're seeing like these big whales playing accordingly to the theater that he's trying to do right now, where Apple, they're not making their phones in the US. They're making the glass here. So it's not the same thing. And now they're protected from tariffs that were taking the stock down the first half of this year.
They're going to have to spend $600 billion. What are they spending that on? I mean, I'm a serious question. Like, what a great press release in front of the world.
Totally.
And I heard something like they're going to do 19 billion semiconductors here in the United States. You understand that Ray Wong, our lead semi-analyst, and I were literally on the plane. I was flying in. We're going back and forth, and we're actually doing an evaluation of every device that is made, okay? Every device. Let me just give you this quick readout here. We looked down every iPhone, every Mac, every iPad. We basically came up with they create about 21 billion chips a year, including all major and minor chips. They said 19 billion are going to be made in the US. I don't know when, maybe in like 30 years, but that means they're going to be sourcing 90% of their chips domestically. So anyway, some of this just doesn't make sense. I mean,
it's fluff. It's too vague.
He's executing though, like his plan of getting people to commit and telling this great story about onshoring. He's getting it done. But will it ever happen? Will you ever see $600 billion spent by Apple? Will NVIDIA spend $500 billion here in the US? Or are they just like saying the right things and waiting for the administration to leave and hoping something changes?
No, I think you nailed it, though, that is the tariff exemption playbook that every company needs to follow. If you say you're building here, you get the benefits and keep global production humming in the background. And if you're big enough, if you're actually powering the market, like you'll be spared. They're not going to hold you to your word. And I think that
the stick. Well, I mean, that's the real question, though, Shay. Like he did come out and he actually said, like, if you try to evade me, if you try to not do anything, if you basically make a commitment and don't execute, he said these on record, they will be basically accumulating these like back taxes, and you will get hit. So this is at least the stick. Like I said, the stick is a huge tariff. It's a huge amount, and it's a do what you're committing to. But we've seen I think it's like the fourth time that Apple has made the same commitment. I think it went up 100 billion, but it was 500, it was 200. I mean, I'm just saying, like, I don't know when this is going to happen. People said we'd never build it here. And then there's all these conflicting numbers, like 19 billion chips are going to be here, or is it glass? Is it, like, what is actually happening? And what, by the way, the real magic bullet is what is enough to keep the administration happy to show that you're making progress, to make sure you don't pay those tariffs, because 100% tariffs will kill. It will absolutely, there's no way that doesn't filter into the economy and in price and create a ton of inflation, and also just create a ton of stress on these companies to have to handle all that tariff costs.
No, you're right. And some of these numbers don't add up. Like the Micron, for example, they're committing 2x their market cap on how much they're going to invest. Like, okay, that's funny. So yeah,
maybe there's a lot of HBM in the future. I mean, I keep saying that it's the first time the memory cycle is not going to implode, is going to be because of the AI cycle.
Yeah, it's a massive super cycle that should high tide resolve boats. Doesn't matter if it's a commodity, they're all going to benefit essentially. But let's get micro. I think that we have so many tickers we want to get over. I want to talk about our top 3 Futurum AI 15 name that reported their earnings this week. Palantir.
How are you doing? How are our names doing since we recorded? We should run that.
Well, 2 months ago, I think the average has to be up 30%.
You talk really quickly. I'm going to ask GPT-5. I'll report back. You get into Palantir.
So Palantir, I think Palantir before I set the stage on what happened in Palantir's earnings this week, I want to set the stage of what the expectations were entering this year. Palantir has always been the most expensive stock in the space for over a year now, since it was in the 30s, 40s. But you need to think about how much they've been executing above estimates. Coming into this year, for example, the 2025 revenue estimates were supposed to be $3.5 billion. What did they just guide towards halfway through the year? $4.2 billion. They're legit raising $700 million in 1 year, just halfway through the year. Who knows what the 2025 actuals are going to be in 6 months from now? I think it just reiterates how AIP is probably the most important Gen AI application launch of this cycle, maybe for the whole era. We always think about in the .com era, what was like the hidden gems or like the crown jewels of that .com era? It was the online marketplaces that are built on top of the structural arteries of the internets. It wasn't the Verizons, the AT&Ts, the Ciscos. It was the Amazons. It was the Googles that were clearly the names to own in that era. I think Palantir's AIP is proving this is kind of the Amazon and Google's of this AI era, where they were just a $10 billion company. Then AI just made it a $400 billion company in 2 years. Valuation, I get it. Daniel and I both agree valuation is absurd. But when you continue exceeding expectations, estimates at the pace that they're doing, it's tough to argue against how much they're executing. Like, that's why they're number 3. Like, if the valuation wasn't a concern, they would be our top dog, tied with TSMC outside of the Max 7 of the most important AI player. But let's get really specific on the earnings right now, because they crossed $1 billion in quarterly revenue for the first time in company history. That's crazy at the pace that they just did that at. They crushed estimates by $60 million. Their Rule of 40 score, which I hate when people use this term for companies that aren't in the software kind of space. They use it for ridiculous, like Astera Labs, for example. We're bullish on Astera Labs. We think networking is incredible, the place to be right now in AI, especially these chips. You can't use Rule 40 for them. It doesn't make sense. It's not. There's no recurring revenue nature really as much. There's a very much a different business model. For Palantir, it makes sense. And they scored a 94. 94. They 2x'd every software terminal goal. Like every CEO who is a state Series B company in the private markets, their goal is to qualify for a Rule 40 score. And Palantir's 2x'd it. So it shows that this company at this scale is continuing to compound at the top line growth while expanding their profitability this aggressively. Screams category leader. This is a stage 2 AI winner. And the commercial side of their business, the US commercial side of the business, is where everyone's eyes needs to go every time they report their earnings, because that is where the opportunity of what's happening on their margins and top line is living, because the government side it's a fortress, but it's wonky. You just never know when these deals come through. But the commercial side is a lot more predictive. It's a lot more of an enterprise software component to it, where you can DCF a bit more. And that experienced 93% growth year over year on a pretty large base. It wasn't a small base. And that segment alone now makes up 30% of the total revenue. That was 20% just a year ago. And now it's also compounding at a 20% clip sequentially, quarter over quarter. Wild numbers. And the bookings are absurd. Like, I think the customer count's going up 45%. So like, this is like a kind of business model where it's catching a lot of institutions off sides. It's something that felt very voodoo-like a couple years ago. But if you did it research, if you had the conviction, if you had the signal, you bought at a level that institutions are now paying a premium for. And that's kind of what's driving this stock up and up. Because if you're a large institution and you have AI exposure and these clients are paying you a fat fee and you don't have Palantir on your books, you look like the biggest schmuck out there. That's what's happening right now on driving the stock. But I'm curious what your thought is.
Can I talk about being a schmuck? I literally woke up the morning after Palantir reported and I had a nightmare. Like, this is how much time we spend looking and thinking about this stuff. And I woke up and I had a dream that I'd bought Palantir at $9 and that I'd sold it at 75. And I just want everyone out there to know that I did buy Palantir at $9 and I sold it at $45. And so my nightmare was actually not as bad as my reality. But sometimes you take a 5-bagger and it would have been a 20-bagger by now. And my argument and why I never got back in was actually everything you just said. I just constantly just beat myself up because it's like, I bought it at 9. I'm not going to buy it at 50. And it's like, I'm not going to buy it at 80. And I'm not going to buy it at 120. And it's the same argument people make all the time about not buying Bitcoin. It's like, oh, it's 80 grand now. People bought it at 12 cents. Well, that doesn't really matter. The question is, what is the potential? And look, I'm going to sound a little bit sonnety. I'm going to sound a little bit like you when I say this, Shay, but this is a company that defies gravity. Now, don't get me wrong. A correction in the market could see this get corrected in a more meaningful way than other sort of more stable Mag 7 type names. I mean, a $400 billion valuation puts us at almost a value of more than Salesforce and ServiceNow combined. But, we did say that like SaaS companies are going to get re-rated. But now these 3 companies are actually all going to be in the same category that we're going to talk about called agentic platform companies. A company that defies gravity with a CEO that is a absolute showman. Okay. There is no, like, if I am a retail investor, right, that is used to just getting pounded in the backside by CEOs that don't speak up at the right time, or they speak up at the wrong time, like your Redwire guy that actually pumps the stock before putting out a shitty earnings report. But I've had CEOs, like, I'm big on SoFi. Everybody in this group knows this. And they have a CEO that's just an operator. He's great, but he'll never come out and like debunk what's causing the consternation in the investment. Alex will come out and call the short sellers a bunch of coke-headed, morons that are basically shorting a stock to pay for their blow. But like, if I'm an investor, I'm like, I love having this guy having my back. And then you couple this, and I know we can't spend as much time probably just on Palantir as I would like to. I'm just going to end it by coupling it with execution at the nth degree beyond its competition. Winning in these key markets that it absolutely will not be unseated from. This is like the inside of the military's intelligence AI platform. It is going to, by the way, take out dollars from all these other applications companies, and a lot. And by the way, they're taking out dollars from service companies. You saw an end of McKinsey article that came out this week. You heard that Gartner, the advisor on IT and technology, got crushed because defense contracts got taken down. You know where those dollars are rerouting? They're rerouting to Palantir. So this is like, look, I mean, I will argue with myself forever about my decision about getting in and out, because I'm usually a hold forever guy too. So it's really weird that I actually exited this one, but I was like, it was so insane to me. I'm like, I got to take some profit. I got this so wrong. I love doing a victory lap, Shay. This is a loser lap. This is a loser lap. But like, it's still valued super high. And if you can't get over that, you can't invest in it. But don't be surprised when it goes to 250. And I'm not Jim Cramer. I'm not saying that loosely. I'm just watching this thing continue to defy gravity.
Well, I think it's also a great example where we might be too close to home on seeing the bigger picture. For me, I missed out on HIMSS because of United Healthcare, my experience there. Yep. Palantir, you're literally in the room one-on-one with a lot of these software CEOs. I'm sure you've had some conversations, a commentary on their front, like, it's just it's a meme stock or retail stock. Like, we don't give too much weight into it until they become a $400 billion conglomerate. But I think it's a great example of we were just too close to the information. But I do want to, I think it's a great transition to, is SaaS dead? Because I think part of the reason why Palantir is also getting such an insane premium is there's an AI tsunami that's been coming. And I think Daniel and I have been very vocal about this all year. And the market's actually kind of starting to realize that this cycle where SaaS, you don't want to be labeled SaaS anymore. And I think their AI tsunami is going to take up conservatively 75% of the software companies out there. And they're not going to go to zero. I think they're going to get their premium multiple removed away. They're going to look undervalued. They're going to be value traps. But being a middleware company, being a SaaS company in a new digital economy or post-AI world, it's a commodity almost, and in a really weird way. And if you've proven that you will be a stage 2 AI winner, not just survive the AI tsunami, but your lifeboat is a luxurious one that's going to thrive, aka Palantir, aka Cloudflare, aka Axon. You're at all-time highs when everyone else is 30 to 40% below. And I think it's really important to know why that is. And I want to get into it
first
before.
I was gonna say you're gonna hit on some of these growth ones that you're tracking and you're both in personally and that we're of course tracking, at Futurum. But like, I put out a post and I mean I've said SaaS, like I wrote a Forbes op-ed in October 2024 where I said like basically SaaS as we know it is over. And now I basically believe there's going to be a new category created. And if it hasn't officially been created, I think Futurum Equities should be the dignitaries of this new category. And we'll call it the APC category, agentic platform companies. Okay. And it's going to bring this new amalgamation of company types that didn't used to compete with each other. So now you've got infrastructure companies that are AI platform companies. You've got SaaS companies that are going to become AI platform companies. You have sort of your traditional kind of middleware companies that enterprise software or security, like you mentioned, like a Cloudflare that are becoming kind of these agentic, and Palo makes another case that what it's doing to become an agentic platform company. But, I think, Shay, there's got to be a list coming from us. Like at some point, like I did a first readout. I had, who are the APCs? My 10, I had Google, Microsoft, Palantir, ServiceNow, Amazon, Oracle, Salesforce, IBM, SAP, and OpenAI. Think about that. Like, what a mix. Eclectic, historical, large enterprise software, pure SaaS companies, big cloud companies, all in the mix together. And by the way, Nuvo LLM AI companies. I mean, GPT-5 is going to absolutely blow up service industries. So many consulting jobs going away.
Well, I also think that before I get into specific names I think are going to be in trouble, I think a lot of these customers, these software companies, a large chunk of them are AI native customers. And that's a little dangerous because as they get bigger and bigger, OpenAI is a perfect example of it. They will just take your open source product, create a competing solution that does 70% of what your managed services is doing and call it a day because they want to own everything in-house. You saw with Confluent. Confluent is the perfect example of the first victim of why the SaaS stream is quietly confronting a new reality where great products don't always translate to great businesses. And in this new world where the strongest products are open source, Kafka via Confluent, we have Elastic has a great search product that's open source.
You got OpenShift with Red Hat,
for IBM, exactly. And then you have MongoDB has a great open source product. There's a new paradox essentially.
OSS GPT-5, they're open sourcing now what was used to be closed model. So that whole China and open source is going to dominate the world. Now you've open sourced it. You've made it model flexibility that you can put it on devices and obviously be run on any hardware. And it doesn't become hardware dependent, which opens a ton of things up. It is really, super important though to take one step back and kind of just answer why they're in so much trouble. You heard Satya Nadella came out and said, basically SaaS is just logic on top of CRUD databases. So what happens at OpenAI, right, Shay, is like, I just prompted, by the way, our stock, I just asked about, I'll just do this really quickly, a little victory lap on your AI 15 list, Broadcom, Palantir, AMD, Astera. Broadcom, 3 months up 55.6%. So since we put them, they were our number 2. I might have beat you up to move it a little higher, but we were pretty aligned on that one.
Yeah.
Palantir, I struggled a little more than you did with valuation, but you pushed me to put it up high. It's returned 37.7% in 3 months. AMD, check this out, guys. Check this out. You should listen to Stock Savvy Shy or maybe someday even to Danny Dimes. Is that what you like to call me? Danny
yeah.
3-month gain on AMD, even after the pullback, 85.6%. Okay. And then Astera Labs, by the way, I broke freaking GPT-5. It was having a hard time pulling this up, but it's showing a 1-month gain of 88.2%. So if somebody like Chai, what you need to do in one of your tweets is an assessment from the day we wrote the 15. If someone had bought 100 shares of each of those companies, how much money would they have today? That is my assignment to you to tweet that out, because maybe during these rallies, during these bullish markets, people should listen to the people like you that have real signal and deliver real alpha. But anyways, I want to just quickly touch on the SaaS thing. We're going to so run out of time, by the way. But in the future, you can, like what I just did is I abstracted a chart, a list, a breakdown that I could just query one engine. It could look across everything available. Enterprise software blows. You have all these disparate databases. They don't talk to each other. Most APIs are not fully functional in a way that works. So if I want to know something across ERP, CRM, HCM, which is your human capital stuff, your project management tools, your supply chain. It's like 5, 6 different tools. My friend Bill McDermott will always talk about chair swivels. You have to swivel between applications, which distracts you from the work. It's difficult to find. And then the abstraction you get isn't presentable. Like you can't quickly actually, like, so in the future, whether it's an OpenAI that creates this or one of these companies figures out how to overlay it, you got to be able to ask one source the question you want to know, and then be able to get the insight you're looking for, and then be able to build on it the way we interact with an OpenAI or Perplexity. That's where it has to go.
First off, like, I want to be a fly on the wall when you and Bill talk, because you guys come up with the most elegant phrases of what's happening. That's so.
Sadly, I can't bring you in because you're the guy that's going to rate the stocks. But
separation of church and state.
I'll leave you in the hall. But that's another thing we can't tell everybody. But there's some interesting things that Futurum Equities is going to be doing. We'll tease that. Just saying right now.
But to tie cherry or tie knot on the SaaS and debt conversation, I think the end all be all is these companies, software companies, succeeded by making themselves very foundational in the old world. Now their largest and most sophisticated customers are saying, thank you, we'll take it from here. And that's the open source trap. That's the cloud native paradox that we're seeing right now. You win the adoption war, but then you lose the monetization battle to eternal teams optimizing spend. It's not a one-off. Everyone thought the business recession that is happening in the past year or two in software was temporary due to macro environments. I think it's more permanent than people anticipate. And I think that you need to be precise and surgical to where you want to place your capital in this stage 2 AI era. And I think that the hype phase is over. I think we're past the point of throwing money at anything with an LLM model demo or any company calling itself a platform or have a high customer count, free cash flow margin, etc. Like, you need to go to the ones that have that operating leverage, that go to market strength, customer stickiness, and most critically, the ones who control the infrastructure and monetize it at scale. And I think that's why these lists are becoming more and more important that Daniel and I are kind of creating, because there is a lot of noise out there now. And I think it's becoming more and more difficult for retail investors to see what's real, what's not, who they invest their capital in, because this is a once in a generation theme, AI. Everything else will be a really exciting derivative, but AI itself is once in a generation. You cannot miss out on this by picking the wrong horse in the race. That's like you went all in on the .com era internet, but you just didn't participate in Google and Microsoft and Amazon. Like, it's life changing. So
well, it's just it's whether it's strapping to the right company or strapping to the right investments, right? I think I saw some stat that like almost everyone that works in NVIDIA is a millionaire now, and there's like some large percentage of NVIDIans that are now worth more than $20 million. But it's the same thing with stock. Like, there's people that work 20 years at Intel versus people that work 20 years at NVIDIA, and look at what they've created. I mean, I know tons of people at other like Broadcom though that are 8-figure wealth that were mid-level managers. They just accumulated RSUs and never sold them. And that is kind of the long tail of good investing. Like, look, and the other thing I've said, like, there will be pullbacks. Things will go back. Like, this has been a raging upside. And so, as we all know how the markets flow, it does this and it goes back down. But then it goes this, goes a little higher, it goes back down. And like, if you pick the good names, you'll ride those waves, but you'll end up doing well over a long period of time. And this is where you do have to be able to be, discriminate between the good and the bad. You have to understand the difference, to your point about not everything with an LLM. But like, the execution is there. And the one thing is, like, we don't see a meaningful degradation of the demand for AI between now and the end of the decade. And I don't really see how it changes after that. I have a lot of concerns about jobs, a lot of concerns about the economy and people when, you have models that can do so much of our work for us. But humanity has fought through that through a lot of different revolutions. And so some of it just might be like a blind spot for us that we can't see it. And we don't know what those next things are going to be. But like I said, the deflationary value, the efficiency that companies are gaining, the productivity adds that they're able to have delivers EPS. So it's like, Shay, I'll tell you one thing, like, if you are worried at all, like, this is the time you need to invest more than ever, because these big companies will become more and more and more valuable. You'll want to be on their cap tables. Because when I don't know what your job is going to be, because the best chance you have is you have really great appreciating investments that you can sit there and watch the Jensen bot. I said this on Fox Business yesterday. I said Jensen will have AGI inserted into him as a humanoid robot. There will never be a successor of a CEO there. He will be the CEO forever. His personality will be inserted into AGI, and he will run that company for the next 1,000 years.
So you're saying that Sam Altman and Elon will have beef permanently because of those bots they're going to create for each other?
I mean, I'm more hopeful for Jensen getting this done. I still don't know what Elon meant about the whole thing about, they're going to eat up, OpenAI is going to eat Microsoft. But the only thing I can think of is that we're closer to AGI than we think, because that's where that relationship breaks between OpenAI and Microsoft. And God, that's scary. If we're already close to AGI,
I mean, we have to conquer super intelligence first. But yeah, you're right. We might be closer.
I don't know, but I don't know what Elon's talking about then.
Yeah,
I'm not inside those research rooms. I didn't get the offer yet from Zuck. But if he wants me to promote a new LLM, I mean, I'm joking. So anyway, let's roll.
let's talk AMD, because that was another big earnings this week. So I want you to kind of hit it off first. I'll add my additional color because the conversation with Lisa, you probably have a lot of insight. You spoke with her before the earnings call. What's your take on AMD's earnings and what their market reaction has been for it?
So we tend to talk to the execs a lot. So one of the things I'll say is I was pretty clear. I think I tweeted it. It got a lot of replies and a lot of responses. Was AMD had to put an instinct GPU number in their earnings and really show. They didn't do it. So they had a good result. By the way, by all traditional metrics, they beat and raised. Like by the traditional metrics. And they did so while they had an evaporating $800 million to China for the Instinct business. All the same headwinds, by the way, that NVIDIA faced at a smaller scale. Difference was NVIDIA still beat the number in the last quarter. And this is why this comparison with AMD and NVIDIA is dumb. You're talking about a company that's 95% of a market versus one that has 5%. It's not really a great comparison, but that doesn't mean there's not upside for AMD. But AMD's ability to show confidence that its AI number, that its GPU number is going up in a meaningful way seems to be the only thing that matters in these earnings. So while they had great numbers for data center CPUs, people just kind of blew that off. They continue to take more market share on x86 and client and PC. People shrug it off. People were 100% focused on the MI, which, by the way, the 355 is not even shipping. So this is still the old, the MI. They're just getting that one into production. And then the growth numbers were good, but people wanted explosive. They're hearing these $1 trillion end of the decade TAMs. They're hearing these hundreds of billions that are expected this year. And what did they get? They got a modest sort of calm. We're doing okay, but I don't want to overcommit kind of. And by the way, this is very Lisa Su. Lisa Su is a person. She's not the same kind of showman as Jensen Huang. Jensen is another absolute showman. He's got all the momentum in his back. He speaks with incredible confidence about what's going to come in the future and NVIDIA's market position. AMD has not yet shown that it feels super secure in its spot. And that, I think, absolutely spooked investors. But having said that, Shay, it's bounced back super nice. Like it had that pullback. And I don't know what, was it up like 6% today? It was at some point. Like the stock was looking pretty good. But yeah, pull that up just because I want to see. But yeah, it was like after that hard sell, because didn't you and I actually talked about it? We're like, it's going to sell. Oh no, it's back down again. It was up, like it was at 176 this morning and it's back down to 171. So I don't know if there was some type of pump and dump.
Oh, yeah, right.
I mean, it went up, it was way up and now it's back down. I just think people don't know what to do here. Like, I've shown my model end of the decade. I think they could be at 35 to 50 billion of GPU revenue with just kind of holding market share. But people want to see more. The whole AMD bull thesis is all about like they're going to start taking share from NVIDIA, and there's just no evidence of that yet.
Well, I think the challenge, though, and what you were trying to get, what you were saying is entering the print, AMD's was being priced like they won the AI narrative already. But I think their earnings report proved otherwise, where their CPUs and gaming GPUs was carrying the story on why they beat, in my opinion. And the valuation was just saying AI GPU super cycle winner. When earnings call, all I heard was like really client ramping up, TSM partnership. It was a lot more of it was a mismatch on expectations on what kind of AI numbers we're going to get and what the reality was, it's not going to say the mismatch is fatal. In fact, we both do believe there is an opportunity in AMD still. It just means that the burden of proof is being shifted now towards Q3, and we need to see MI350 units ship in volume. We need to see ROCm traction continue with real customers, and I do think that we just need to see some life of the delta being closed between AMD and NVIDIA. We both believe there's not going to be any kind of competitor towards NVIDIA. We just want to see some momentum towards that sub 10% share in that AI accelerator market that's really exceeding expectations. Like you're seeing it
win on inference. It needs to win on inference. It needs to have this inflection because the CUDA sort of demoting CUDA. I mean, China can't even do it with policy with its own chips. Like it's just a hard thing to do. But inference doesn't have the same software complexities. And so they need to show, they marched Sam Altman and others on stage at their big AI event last year. It's like, how much is this impacting the number? But I do think you're going to see some boost at 355 and in the 4 series when they go to rack scale. But it's like I said, this just is one of those instances for the investors where it can't happen fast enough. And Lisa's just not the type that's going to get on stage or get on an earnings call and really sort of rip the faces off shorts. She's going to be conservative and she's going to let the numbers do the speaking. She's a great CEO. But I was talking about with like retail, when you want that kind of Alex Karp type or you want that Jensen type, that's just going to just go to war when the market starts to play against it.
No, I mean, I hear you. I think they're going to build the second best inference platform in the world, and that sub 10% share is going to be massive for them. It's up for grabs. Theirs to lose, to be honest. But we also said who a major winner of the inference boom is going to be as well. And they reported a monster earnings this week that's causing a re-rating, and that is Astera Labs. We've been saying it all year. AI's biggest bottleneck is going to be data movement due to the inference boom we're about to see. That's just getting started. And the numbers that Astera Labs was reporting this week was video game-like numbers. 150% year-over-year growth while having net income margins of 40%. Bonkers. And this is the time where everyone is chasing compute exposure, but Astera Labs is cementing themselves as this like physical layer of inference where they're becoming the toll booth between the accelerators, memory, and storage. Like we say it all the time, AI is intelligence. That's why there is no ceiling really yet on this. Infinite demand because it's not a product, it's a character traits. Well, if AI is intelligence, inference is the tax on intelligence. And that's why you're hearing Dano and I constantly talk about Broadcom is the Uncle Sam of AI. They're the tax collector. Well, Astera Labs is the derivative of that, where they get the most pure AI exposure as that toll booth. And they just proved to the cycle. And I think what's coming next is even bigger with the Scorpio X. That's supposed to be scaling up the interconnect switch from the XPU to XPU traffic. I think that you're seeing the market now re-rate them with somewhat of a premium because they're showing there isn't that much. There's still a risk of bigger customers saying, like NVIDIA, for example, turning the faucet off, like, wow, you're $100 billion company all of a sudden. We're going to create our own internal product and phase you out. Always going to be a risk. But we're not seeing any evidence of that right now yet. They're NVLink Fusion's partnering up with them.
There's risk, in my opinion, is Uncle Sam getting knocked out by Uncle Tan, Uncle Hawk Tan. Because Hawk is great at cornering a market at the right time and using the broader needs that companies have for Broadcom stuff. I'm just saying, like, I think that Jensen is going to need. I mean, when you're trying to get from 4 to 5 trillion in market cap, at some point you're going to have to pull all the threads. Like, I get that, like everybody thinks it's just going to come on pure GPU growth, but it's all about building the stack, and the full stack is like that's what they've gone rack scale. I love A Lab. I love what they're doing. I do think there's some risk here. I do think, but having said that, they've absolutely blown through the walls. Just that I think, like I said, I think Hawk, I think Cisco, I think these big, they're going to look at this and they're going to be like, is Astera's Lab market share like the size of like, it's got to be like creeping up on, what is it, 40 billion now? I mean,
it might have hit the 50 billion mark. Let me see. It's on a tear.
I mean, it's going to be like the size of Cisco soon.
No, oh my God, it's only 28 bills still. It's actually not as much as you think.
Okay. Well, then maybe we're okay. But I mean, like suddenly it's like, yeah, like the size of Cisco. I mean, they're going to be looking. They're going to be paying attention to this. It's Apple's done this for its entire life. They've built up companies to a certain point, and then so that's my biggest risk factor there. But the technology is great, and they seem to have absolutely locked in at the right time.
Well, yeah, the hope is that they diversify their customers enough where there isn't as much of a concentration risk, which there is right now. Like, don't confuse you guys. Like, there is. Like, I've been trimming my Stereo Labs, de-risking it. I wanted to. It's the same. This is a great example of portfolio management, guys. Like, I got into Palantir under $10, Rock Lab under $5, CrowdStrike got $100. When they triple or become a multi-bagger, I like to de-risk my initial investment, and the rest is profits. I let it ride until investment thesis breaks. For Stereo Labs, I'm almost at that point now. I've been trimming where everything's profits, and I'm just going to let it ride until the thesis breaks and NVIDIA turns the faucet off. AWS does something wonky, but de-risk yourself. Don't like hold the bag. You kind of see that with Trade Desk right now. If you did that with Trade Desk when signs were there,
which I want to say I entered Trade Desk today. I wrote 35-30 put spreads for January, and I got $1.10 a share. So if it goes down under 35 in January, I will take a position. By the way, if it goes under 35 at that point, it's also something bad has probably happened. So, but that's how, by the way, I like to play these wild sell-offs, because they didn't even miss, by the way. I know we kind of quickly pivoted, but I mean, they're on our list just really quickly. Like, by all fundamentals, they didn't really miss. They just didn't do enough, right? I mean, you follow this more closely than I do.
So I will victory lap. I called this 3 weeks ago. I closed my position of 5 years, guys. You guys know I treat each holding like a relationship. I'm a rom-com. Like, I'm the Judd Apatow of investing, where every hold kind of relationship for me. And I think it's tough for me to pull the trigger a bit, but I just saw the signs. I was like, the new AI winners aren't going to be the old winners of the previous economy. And ad tech is going to get disruptive from this, just from the signal I'm getting from Meta and Amazon. It's going to be disruptive to the point where, and Google too, like, where ad tech won't have a premium valuation associated with it anymore. It's too difficult. And you saw the signs of that right now with Trade Desk, where entering this print, they're trading at 55 times free cash flow. They deserve to be around 30 times with their margin profile and with the risk of competitive headwinds from the bigger players. I think you're seeing where the middlemen are getting squeezed in this post-AI world. Trade Desk is a middleman. It is. And they're going to be just fine, but they've had Jeff Green has done an incredible job since they've taken him public, where he was able to get a pure ad tech player with a premium valuation. That was something nobody ever dreamed of, like, as a publicly traded company. Look at Magnite. Look at all these like smaller players. Like, they don't have a premium. It's it's value traps, but Trade Desk was able to get one until the foundation changed now. And you have to be very swift to make these decisions, because AI tsunami, it's not just coming from software, it's coming for every industry almost in the tech world, that you need to make these like quick pivots. And even if it's noisy, stay on the sidelines until you're proven otherwise. And I think for Trade Desk, down 40%, it makes sense.
I like it at 30 to 35 bucks. I will buy it all day. And so that's why I'm playing I like to use an option strategy to do that. And at a time in the future where you get some premium, and if it never gets back down there, you've made a little money on the bet.
Yeah.
And if it does come to you, you end up buying it at a much lower price. It's something I do, different strategies for different folks, but that's a strategy. If any of you want to know more about, feel free to ping me on Twitter, and I'll get to you in the next 12 to 24 months.
I do want to pick your brain though about like why distribution matters so much now in the AI driven ecosystem for ads, especially for me. Like, I'll give my quick spiel is that Amazon Meta, like, leveraging the amount of first party data that they have to fully automate these campaigns, and it undermines a Trade Desk like neutral marketplace advantage that they've had outside the walled gardens, where Amazon's growing foothold in the CTV space is very new, but it's gaining a lot of momentum. Not even talking about Meta's like AI powered stack that's clearly disrupting a lot of spaces. But what's your take on why distribution matters even more now?
Well, the only thing I'll say is that, we can't forget that there is this whole part of the market that does need to be served. You like DigitalOcean a lot. It's kind of like the smaller companies that want to do AI. Like there's a cloud for that, right? That's what, I mean, isn't that kind of what you like about it? Like they have a cloud that's really designed. And it's like, I think that the trade desk has a positioning where it's like, look, you have the three biggies. Everybody knows about them. But how do you find the other places where content might be placed in this post LLM world where you can get value? And by the way, it is about value because as we already know, the whole ad model and ad tech model is somewhat on thin ice with AI. When you do a search on GPT-5, you do a search on Google, like the way we used to do it, like 17 searches per click. Now we're talking about thousands of searches on an LLM to get a single click. So everybody's going to have to figure out, like, how do businesses continue to be seen and be relevant in an era where you can't get clicks the same way? So these big players have huge boats, but there does have to be somebody. There has to be a digital ocean of ad spaces to help people find and match buyers online to the right ad sets, the right ad technology. So I think that's where their role could play. And that's why I said, I think they needed to be re-rated and I think they needed to be bumped down, but I don't think it's zero. I think there's a place in the market. It's just like, where does Perplexity fit? You could say, oh, it doesn't fit. Well, look, they're doing pretty well. They're an $18 billion company, but they're fighting against a bunch of $1 trillion and hundreds of $1 billion companies. Doesn't mean there's zero place for them, but it is less exciting. And that's why, like I said, I'm kind of playing an entry point. Like if I can get it at stupid low price, I'll buy in there. If not, I'll collect premiums on options.
I also think it's like imperative where Meta's outpacing Trade Desk's revenue growth. YouTube is outpacing Trade Desk's revenue growth. These are massive companies where Trade Desk is a pure form of that, and they're growing 14%. I think this is like a great example. Again, like we're talking about not just ad tech software. I think a lot of these companies who are in proven mode in the new digital economy, they're going to get re-rated towards 20 to 30 times free cash flow multiple.
Which, by the way, it's not terrible.
It's not awful.
It's reasonable. It's what a lot of the bears would kind of say where things should be valued at. And by the way, like right now, I say this all the time. There's so many companies. Like I did a big splash about Gartner and how they dropped 40%. They're a company that provides IT advisory, not that different than Futurum's core business, but they're super people heavy. And what I'm saying is, like, they need to be re-rated right now. There's just no way you can evaluate a company like that doesn't do AI at scale. That's the same problem that all the big five consultants, they're all in trouble because of the way AI. So what I'm saying is, like, when people have a choice, Shay, between all the different things you can invest in, right? You chose Palantir, and you're like, oh, I didn't choose HIMS, but you chose Astera Labs. You chose, like, nobody, well, except maybe Elon and a handful, has infinite dollars to invest, right? You have to pick your horses. You have to pick your companies. And so right now, if I'm a company like the Trade Desk, the hard thing is going to be to convince institutions or even retail at this point to come in and put $1 there when you could also put $1 into HIMS, put $1 into Palantir, put $1 into something that's seen as super undervalued like Oscar, which we need to talk about HIMS and Oscar before the show ends. We have like 6 minutes. But like, what I'm saying is, like, you're going to choose the things that you think have a ton more upside, especially if you're going to take risk. So Trade Desk is in that interesting juxtaposition between, having a lot of risk, being re-rated, not being the king of their market, but there is a price where entry is good, but it just doesn't have the excitement. It doesn't like look at Robinhood. I mean, it's 114. It's blowing through its all-time highs again. And it's like people keep going, it can't get more expensive. It can't go up, but people clearly believe, Shay, that company is going to be worth a lot more in the future. And they would rather bet there on a company that seems overpriced by all traditional metrics than go into something that has been re-rated that you just don't see the upside on.
Well, let's be honest. Momentum is getting a premium now. If you have momentum, you get a premium assigned to it. So you need to find the momentum is a tricky thing. As soon as it stops, it gets re-rated really difficult, very aggressively. And you mentioned DigitalOcean because I do want to get to HIMS and Oscar because you and I, the hour flies by whenever you and I talk. But DigitalOcean, the reason it's the AI cloud you've never heard of, and they're trading at 10 times EBITDA multiple. So it's a different philosophy or different lens of why I believe DigitalOcean deserves a re-rating when I'm getting it at a price where I think it's undervalued already. 10 times EBITDA is a very high floor of what the risk is. You heard the commentary from Patty that it's a soft guide of they're growing their top line 20% end of 2027 while maintaining 35% EBITDA margins. So I think the stock belongs more towards a 30 times EBITDA multiple, like I mentioned, where there is going to have momentum in AI cloud, and times multiple feels like the new mean now towards the second and third layer of the new digital economy players at those tiers. I think this is going to deserve a 3x because their AI machine learning revenue has gone up 100% year over year. They've taken 76 customers away from the hyperscalers. Everyone views them as this AWS Lite, Lite, Lite offering. I don't think it is. I think they are trying to become this democratization of cloud computing where inference is going to explode like we think. That's the thesis on AMD, thesis on Astera Labs. Why not cloud computing where Joe Schmo, me, or not Daniel, because he's far greater than the Joe Schmoes, but like for me and like my buddies, if you want to create an SMB, we're not going to pay the cost of an Azure, AWS, Google Cloud. We're going to go for the similar offering that does a good enough job that's actually affordable. And that's what DigitalOcean is. And that's my thesis on it. And we'll see.
Yeah. So I got three minutes because I got to run. But like, let's run hard here. I'm going to give you one quick on Oscar. I'm just going to tell you guys, I'm the guy that's literally buying this on its cash. It has literally 13 plus billion dollars of cash. I just think it is absolutely undervalued. I 150% increase on my position this week. And then I did more options writing if it is to drop below 15 out in the next couple of months. I'm not as technical on like MLR and all those things. It's just one of those things. I'm just looking at it. I'm looking at the cash. I'm looking at the industry's need for a successful disruptor. And by the way, the GPT-5 partnership was pretty cool that they're partnering up with AI right now. But I do want to talk about this one right now. 74% growth, but this was the first time in ever that they missed. They actually missed and they got pummeled for it. But having said that, they've totally shrugged off Novo. They've totally shrugged off the concerns about FDA, the concerns about compounding. By the way, Lilly's pill was had crappy results, which sent Viking spiking, but is also a good thing for Hims, another company that can't get it done on compounding. But Shay, this is my question for you. Should I buy more? Like, what's your opinion? Like, I generally on a selling day like that will write some options. I didn't do anything though. I've amassed a pretty big position. I think the growth number is great. I think the miss was kind of overdone a little bit in terms of it because it was still such great growth, but it was a miss and they hadn't missed. I mean, give me your minute take to because I know we got to wrap this up. I got to run. Man, I can't believe
it's not a broken business. I think it's more of a business in transition. And I think that their GLP-1 side of their business is getting phased out. I think their core business was assuming it would pick up the slack and that Hims would continue compounding like clockwork that they've done for years, but that was just not the case. It's a lot messier than anticipated. And I think that it's up to 130% year to date, guys. Like it's just digesting now until it figures out what the new foundation is on the new post GLP-1 world. So we ran out of time.
Oh my God. How does it go so fast?
I know. I almost feel like we should do 2 of these a week, but I know our schedules are way too busy.
Maybe during the big earnings weeks, we make a commitment to try to squeeze another one of these in because I'm getting lots of comments from people that are like, "This is the best." I had someone that said they couldn't believe it was free. We should maybe start charging for people to.
No, but I appreciate you guys all tuning in. I know this was a quick one. Episode 8, it's the Kobe episode. So hopefully we brought the greatness like he did his whole career. And I think next week's another busy earnings week. So we got lots to talk about next week. Thanks for tuning in. See you guys next week.